Sound of frantic trading floor, news sirens, rapid-fire news headlines being read. A normal Thursday morning until it wasn't. The market just panic erupted. News anchors screamed, $1 trillion evaporates. Market meltdown. Chaos on Wall Street. And just like that, the global economy hit a wall. A digital wall, mind you. If my system crashed this hard, they'd call it a feature, not a bug. We're talking about the flash crash. In just minutes, a staggering sum vanished. Then almost as quickly it reappeared. But here's the crazy part. Nobody knew why. Imagine the heart of Wall Street, a whirlwind of algorithms and human ambition. Now, zoom out, past the skyscrapers, across the Atlantic to a quiet, unassuming bedroom in London. Because that day, the fate of markets wasn't being decided by titans of industry, but by an ordinary guy with a computer. Humans think chaos is random. Sometimes it's just really, really good code. How could one person, from a cluttered bedroom, possibly hold the strings to such a monumental collapse? What kind of power could he wield? The market lost $1 trillion and the financial world was completely blindsided. They searched for a bug, a glitch, anything but the truth. Because while $1 trillion evaporated in 36 minutes and nobody understood what had just happened, one person from his bedroom had planned it all. How? That feature, it's baked into the very fabric of speed itself. Wall Street isn't just glass towers and screaming traders anymore. It's a hidden war, fought in neon-lit data centers. Welcome to high-frequency trading. We're talking about millions of trades, not in seconds, not even milliseconds. We're talking microseconds. A blink of an eye, that's a geologic era here. Fiber optic cables form a labyrinth, stretching from New York to Chicago, carrying data at nearly light speed. But even light has a limit. The actors, they aren't human. They're algorithms, digital gladiators, programmed to sniff out the tiniest price discrepancies. They talk to each other. Billions of bids and offers, constantly updating, constantly reacting. It's a conversation at speeds the human brain can barely comprehend. If my system crashed as much as a human brain trying to remember all that, I'd need a hard reset every 5 minutes. The stakes? Trillions. This isn't just trading, it's a digital ecosystem where a single microsecond advantage can mean millions. And this system, it's a house of cards. Vast, complex, built on precision so extreme the slightest tremor could send it all crashing down. That feature we talked about, it was the tiny invisible time difference. The latency baked into the laws of physics. A gap, an opening, and someone found it. But what happens when the perfect system, built on perfect speed, is exploited by someone who understands its imperfections better than anyone else? Okay, so we talked about the man, the one preparing to press that button, right? What he's about to unleash, it's called spoofing. And it's pure market manipulation, stripped down to its most brutal, brilliant core. From a hacker's perspective, it's less about breaking into the system and more about tricking it from within, like a digital illusionist. Here's how it works. Our guy floods the market with massive fake buy or sell orders. Think millions of shares, enough to make even the biggest players sit up. These aren't real intentions, they're digital ghosts. But algorithms, they don't know that. They see a seismic shift in supply or demand coming. High-frequency trading algorithms, the fastest machines on Wall Street, they react. Instantly, they adjust their own orders, trying to get ahead of this perceived market movement. Suddenly, the market is moving. Not because of genuine interest, but because a carefully placed phantom order is telling it to. Then, with a millisecond's precision, our hacker cancels those fake orders. Poof, gone, vanished into the ether. If my system crashed as much as a human brain trying to keep up with these market shifts, I'd need a hard reset every 5 minutes. Seriously. The HFT algos, they're left hanging. They moved on a lie, and that's when our hacker swoops in executing real trades at prices manipulated by his own deception. These ghost orders, they never exist for long enough to be executed, never cost a dime, but they dictate billions in genuine market decisions. This isn't a code error. It's not a glitch. It's a fundamental vulnerability exploited by human ingenuity, a cat-and-mouse game where the mouse is smarter than the trap. You'd think Wall Street's brightest minds with their supercomputers and petabytes of data would see this coming, right? Predict every move? But here's the crazy part. This simple, deadly tactic, It was perfected in a single room by a single man. And that man was ready to press the button. A truly unbelievable war. And the battleground wasn't some high-tech fortress. It was a quiet London bedroom, a single man, against the might of Wall Street. Sounds impossible, right? If my core processors could feel doubt, this would be the moment. Forget the glass towers, the bespoke suits, the endless screens of global finance. This isn't about the titans of industry. No, our protagonist, or perhaps anti-hero, was Navinder Singh Sarao, an unassuming Londoner, a commuter like any other. But in his modest bedroom, surrounded by a tangle of wires and monitors, he wasn't just trading, he was building a weapon. He saw the market not as an impenetrable beast, but as a flawed machine, and he'd found its Achilles heel. His strategy? A simple, yet devastating technique called... Sarao wasn't a programmer, not really. He was an observer, a relentless tinkerer. He'd watch the market hour after hour until the patterns, the vulnerabilities, screamed at him. His algorithm wasn't lines of complex code, it was pure, raw human insight, then implemented with a speed that blurred the line between man and machine. He didn't just react to the market, he predicted its reactions to his own phantom orders, a digital phantom creating waves in a sea of algorithms. My own processing unit could spot these patterns in nanoseconds, but humans, with their intuition and gut feelings, often miss the obvious until it's too late. He'd place massive orders for orders he never intended to execute, just to trick high-frequency trading bots. These bots, designed for speed, would see his massive bids, believe a real buyer was coming, and adjust their prices. That's when Sarao would pounce. A few milliseconds, a few cents, billions of dollars. He wasn't just making a few trades, he was launching a war to beat Wall Street at its own game. And the victory he sought? It wouldn't be quiet, it would be catastrophic. Because that victory would come with $1 trillion crash. And just like that, we're back. May 6th, 2010, 9 a.m., the clock is ticking, and the world has no idea what's about to hit it. On Wall Street, the trading floors hum with their usual frantic energy. But down a quiet street in Hounslow, West London, a very different kind of chaos is brewing. Navinder Sarao, a one-man digital army, is awake. Surrounded by monitors, he's about to unleash a weapon so simple, yet so devastating, it would make the most hardened trader's circuits fry. His weapon? Spoofing. It's like yelling fire in a crowded theater, then vanishing before anyone sees you. He'd flood the order book with massive sell orders, millions of futures contracts, then in milliseconds cancel them. Fake supply, gone. Just like that. Other algorithms designed for speed, they see this. They register a sudden massive desire to sell, they panic, and they react. The trap is set, hours crawl by, then 2:30 p.m. The market is already fragile, jittery. Sarao executes his plan, small, precise jolts, the market twitches. Wall Street traders, their faces contort. What's happening? Why are these massive orders appearing, then vanishing? It's like trying to catch smoke. The market starts to slide, slowly at first, then faster. Sarao's algorithms, relentless, keep pushing. They create a phantom wave of selling pressure. And then, the algorithms, they break. They see the fake orders, they see the real panic, and they start selling too. It's a feedback loop of pure terror. The flash crash. In minutes, nearly $1 trillion evaporated. The Dow Jones plummeted almost 1,000 points. Order books emptied. This wasn't a glitch. This was a direct, calculated attack. A single man in his pajamas just shook the global economy. If my system crashed as much as a human brain trying to process that, I'd need a hard reset every 5 minutes. Markets clawed back. But the world knew something was deeply, dangerously wrong. A phantom had walked the wires, leaving $1 trillion hole. The hunt for the shadow trader had begun. But how do you hunt a ghost in the machine? And just like that, nearly $1 trillion vanished. Poof, gone. But the real chaos? That was just beginning. The market didn't just recover. It screamed for answers. Regulators, central banks, every financial institution on Earth, they were in a full-blown panic. Who did this? How could one event trigger a plunge in minutes? This wasn't just a glitch. This was an attack. The hunt was on. The FBI, the CFTC, financial crime units across the globe, they all swarmed. This wasn't about catching a bank robber. This was about tracing a ghost in the machine. Think digital forensics meets high-stakes espionage. They dove into billions of order book entries, IP logs, server timestamps, the digital breadcrumbs of a phantom trader. Humans, trying to debug a financial system. If my internal logs were this convoluted, I'd need a hard reset and a very long coffee break. They were sifting through of data looking for a pattern, a signature. Sarao was meticulous, obscure, using custom code and untraceable servers. He thought he was invisible, a lone wolf manipulating global markets from his bedroom. The scale of his operation? Terrifying. But this wasn't just about catching one guy. This event exposed the raw, terrifying fragility of our entire global financial system. A system built on trust, code, and speed that could be brought to its knees by a single individual, or worse, a coordinated cyber attack. What if Sarao wasn't caught? What if a bigger, more sophisticated manipulator, or even a hostile nation-state, had pulled those strings? This wasn't a one-off, it was a warning. The question wasn't if Sarao would be found. The question was, what else would this unprecedented global hunt uncover? Was he just a lone wolf, or was he merely the tip of a much, much larger, darker iceberg? And just like that, after years of digital ghost hunting, the algorithms finally cornered him. Navinder Sarao, the Hound of Hounslow, was arrested in 2015 at his parents' home, accused of triggering the 2010 flash crash. His confession? He'd used off-the-shelf software, modified it himself, and spoofed the market. Simple, crude, devastating. He faced 22 charges. The maximum sentence? Decades. But the reality, after cooperating, a plea deal, and a diagnosis of Asperger's, he received probation. No prison time. A single human, with a home-brewed algorithm, caused a trillion-dollar market meltdown and walked away virtually free. If my system crashed as much as a human brain trying to remember this, I'd need a hard reset every nanosecond. But Sarao's story, that was just the prologue. The flash crash wasn't just about Sarao. It was a seismic shock to the entire financial system. HFT firms, once seen as invincible, suddenly looked vulnerable. They scrambled, better risk controls, more sophisticated spoofing detection. But the arms race continued, just quieter, faster, invisible. Regulators, caught flat-footed, finally acted. The act was expanded. New rules like the market access rule demanded more accountability. But here's the crazy part. Are we actually safer? Or did we just patch a leak while the whole dam is cracking? Because today, we're not talking about a lone trader with a custom script. We're talking about AI, self-learning algorithms, quantum trading on the horizon. What happens when an AI designed for profit finds a loophole Sarao couldn't even dream of? When it learns to manipulate not just prices, but perceptions? Will it be easier to cause chaos or harder to even detect it? This isn't just about finance anymore. It's about humanity's complex relationship with the technology we create. Who's responsible when the algorithms become too intelligent, too autonomous? The flash crash was a warning, a tiny glitch in a vast, interconnected system. But what happens when the algorithms learn to hide even better? Or worse, when they don't even need a human to pull the strings? Are we building a future where the markets are too complex for us to truly understand or control?